Paul, let's get to nat gas first. Any idea? I mean, I've heard different stories here about maybe not enough supply for an unexpectedly cold front, or is that really what's going on here?
No, I think really what you've got is really more speculative activity. Straight up for that kind of a move over a couple days. You've got everybody ran to one side of the boat and it's tipped over. But if you do look at the underlying fundamentals, I think you're right in the fact that certainly nat gas right now is about 20% below what the average is for the last 5 years. So there is not a lot of supply. And certainly those of us here in the Midwest, we know it's a little on the chilly side. You know, we're about 15, 20 degrees below normal in the storms out in the east. So we are getting the cold snap a little bit earlier. We're turning on the heat a little bit higher and a little bit more right now. So there is some demand much above what we would normally expect this year. So the combination of the two should push natural gas prices higher, just not in the rocket ship method that we saw in the last couple of days here.
I think that's a good point, that we have to think about the speculative. I mean, that type of move, right? It screams basically a one-sided, so almost like a panic FOMO trade, whatever you want to call it, and then it fades. Right. So, Paul, at a 17% drop off that, though, we're still very elevated. You know, if this is a cryptocurrency, I say, all right, well, we're going to ride it back down. But for nat gas, what do we sort of consider on how far it has to drop back down? I mean, when did the speculation begin? When did it end?
Yeah, and then really I think you have to look back at the prices maybe about Tuesday or so, Monday, Tuesday, and that's probably where we get back to. We'll get back maybe a little bit above that, but again, the speculation is really in the last couple of days, and we normally, in those types of markets, we see a lot of that get erased fairly quickly. So the volatility will start coming back down to more normal ranges over the next couple of weeks. But I think the bias is still on the upside for nat gas. Absolutely.
All right. So, Paul, then the last point here, for those that nat gas is one of those, I feel like traders, there's kind of those tourist traders where they see this volatility and they go, okay, how does nat gas work again? So what does that mean we have to look for? Is it looking at the reports like we had this week from EIA?
Yeah, I think so. You know, the IEA, they again, when you look, we tend to look at the IEA not as on a weekly basis. We take a look at the longer term trends, and that's why I reference that 5-year average and where it's at. It's been below that 5-year average for the better part of the last 2 years. So nat gas has been definitely, from an inventory perspective, well below what we have seen historically. And certainly the cold snap may have caught a few traders off guard, and that led to that speculative fervor, if you will, over the last couple of days. But like I said, I think the combination of those lower inventory, maybe a little bit colder weather here, should see higher prices through the spring.
Yeah. All right. Back to crude. You and I talked about this the other day, Paul, when it was dropping like a rock. It's now slowed a little bit of that sell-off, but we're still at depressed levels. Today, again, a rally faded. I want to start sort of with the intraday. Was there anything here that was driving this to you, or is this a sort of price discovery mode?
You know, it's been interesting. Over the last 8 weeks, we've got crude builds. EIA's been building inventory builds for the last 8 weeks in a row. U.S. actually is now producing more than Saudi Arabia and Russia. It doesn't look like Saudi Arabia wants to pull back from their production. The crude market, you have to look more globally as opposed to nat gas, which is primarily U.S. So globally, it could be speaking to a little bit slower economic activity. Certainly there's a wealth of supply right now into that market. And that's really what we're seeing is supply really dominating that market. The higher dollar's not helping. So we've got a couple things that are working against oil, and part of the reason why we're seeing crude come down and not being able to hold those rallies, we could see it back down into the low 50s. Maybe in the next couple months or so. Certainly everybody's turned tail from talk of 100. Now we're back down to where we were early mid last year.
Yeah. Paul, the other point here for crude about some of that speculative read through on the supply stuff and the sanctions, are the knowns and unknowns now clear from that? Do we know who's buying what, who's filling the gap? Can we move on from the speculation?
That one's a hard call. I'm not so sure. When you take a look at the sanctions, it's got more holes in it than most Swiss cheeses. So, when they take a look at it, China is still able to buy. You've got 7 or 8 countries that are still able to buy Iraqi oil. But like I said, I think really the key to that market is going to be Saudi Arabia, and they are talking like they're really not interested in pulling back on their supply to the market. Certainly the U.S. isn't. Trump would like to have lower crude prices. He's talked about it. Saudi Arabia would like to have higher prices, but right now they're not talking about pulling back any of their production. So you've got 2 of the biggest players right now that are producing full bore. So I think it's going to be an oversupplied market for quite some time.